Many people assume that if their FICO score is under 750, the American Express ecosystem is completely off limits to them. If you have a damaged credit history and you want a premium card, the traditional process is a blind guess. You fill out the application, hit submit, and cross your fingers. The moment you do that, the bank checks your file. That action registers as a hard inquiry on your credit report. Here's the flowchart of a standard application. If your score isn't strong enough, you get a denial. The hard inquiry remains on your report, dropping your score even lower and locking you out of other credit options for up to 36 months. But you don't actually have to apply blindly. American Express has built-in alternative pathways, engineered specifically for thin or recovering credit files. They don't evaluate you strictly on a 3-digit FICO score. They rely heavily on their own internal relationship algorithms and specific entry-level gateways. To use these gateways, you have to accept a trade-off. Gaining access with bad credit means you cannot target premium, high-reward cards right away. You have to focus on entry-level products. Build a long-term internal profile by using risk-free evaluation tools instead of gambling on a single application. The primary tool you use to safely enter the ecosystem is a feature called Apply with Confidence. To understand why it works, we have to look at the difference between a hard credit inquiry, which damages your score, and a soft inquiry, which does not. This split-screen diagram highlights the mechanics. A hard pull leaves a permanent mark on your public record. The Apply with Confidence tool uses a soft pull, reading your data without leaving a trace. During that soft pull, Amex evaluates specific data points, primarily focusing on your payment history and your open accounts. Before you formally submit anything, the system gives you a definitive decision, approved or not approved. If denied, you simply exit the application and your FICO score takes 0 damage. If approved and you accept the card, they execute a hard pull, but you only take that hit when approval is guaranteed. Keep in mind, this tool is currently restricted to personal consumer cards. You cannot use it for business credit cards. Because there is no penalty for a denial, you can test your eligibility repeatedly. If you get a no, you pay down some debt, wait a few months, and test again. The Apply with Confidence tool eliminates the guesswork. You can safely probe the gatekeeper until your profile is strong enough to pass. But the soft pull only works if you test the right cards. If your score is under 670, applying for the Platinum or Gold card means hitting a brick wall. Their underwriting standards are rigid. Your strategic entry point is their co-branded products, specifically the Delta SkyMiles or Hilton Honors cards. This quadrant chart plots approval odds against brand prestige. Premium Platinum and Gold cards are isolated in the low odds corner, but co-branded cards are designed to capture hotel and airline loyalists, pushing their requirements directly into the high odds zone. The trade-off is straightforward. You accept lower rewards rates and fewer luxury perks to secure realistic approval odds. What you get in return is a member since date stamped on your profile. You have officially started your internal relationship with the bank. Compromising on the specific card is the toll you pay to enter the ecosystem, building the history needed to eventually move towards premium products. If your credit score is too thin even for a co-branded card, the highest yield strategy is authorized user status. This is known as piggybacking. You find a highly trusted family member or friend with an established Amex account, and they add you as an authorized user to their card. On this network graph, Amex imports the primary cardholder's payment history and account age directly to your credit bureaus. Their high limit is added, lowering your utilization. But if the primary misses a payment, that negative data also reports to your file, damaging your score. And because you are not financially responsible for paying the bill, the primary cardholder is taking on all the financial risk by adding you. Authorized user piggybacking definitely requires mutual trust, but it instantly imports years of positive history onto an otherwise empty or damaged file. Finally, we have to look at the most difficult subprime category, consumers who are on the internal American Express blacklist for past unpaid debts. Defaults fall off public credit reports after 7 years, but the American Express blacklist has a much longer memory, tracking past defaults for a decade. The only reconciliation pathway for blacklisted consumers is an invitation-only backdoor called the Oasis program, which leads to the Optima card. To get that invitation, there is a rigid prerequisite. You must fully pay off the original balance you defaulted on. The Optima card is built for behavioral rehabilitation. It offers 0 rewards, no perks, and comes with an annual fee. It is a strictly utilitarian tool to prove you can manage credit again. If you aren't on the blacklist but simply have a thin file, you can build internal equity by opening an American Express high-yield savings account. Holding depository assets in their bank proves you have cash on hand. This directly feeds their internal algorithms, boosting your relationship score for future card applications regardless of your external FICO number. American Express prioritizes its own internal relationship data over standard credit scores. By reconciling old debts or establishing depository assets, you give yourself a definitive roadmap back into the